We are here on this amazing day. Okay everyone, this is Cam Jones, FX Daily Analysis. Disclaimer, I am not a professional. Please watch these videos at your own risk. These videos are for entertainment purposes only. Thank you. Friends and family on Discord and Telegram. Families and friends will prosper. Let's pick up for business. Okay everyone, we are marking up EUR NZD. Let's start our market structure. So back in November 1st, or since November 2001, the market has started off. It started off at an area of resistance. I see a pattern. I want to demonstrate what I see. The pattern is a double bottom. It's the first leg, second leg, third leg, fourth leg. The market wasn't able to push up further after the retest, so the market pushed down, broke the support, came back to retest the support, and we got the full drop there. Market ran into an area of support. There's another formation here. I'm going to demonstrate what I see. That's the double bottom, first leg, second leg, third leg, fourth leg. Now somewhere it's supposed to be a retest in this area here, but it didn't happen. It probably happened in a lower time frame, but then the market pushed right back up. The market almost returned back to previous areas of resistance where the market started off at. So it broke one support, two supports, three supports. Market lost momentum. We got that drop back through the two areas of support. From there, the market created more momentum, and we got that push up from the top. I see a single bottom here with a retest, a few retests, and it pushed up. So I see a single bottom, and there's a double bottom, retest, retest, market pushed up. So here we go. See. So this is the single bottom right here. Then once the market pushed up, it went to an area of resistance, wasn't able to break. Here goes the double bottom. First leg, second leg, third leg, fourth leg. Here comes a retest. Came to retest previous area of support. Wasn't able to break after the retest. Most of the time, the market pushes up. 1, 2. So we pushed up to new areas of higher highs. There's a pattern here. I'm going to demonstrate what I see. So when a pattern came up, it was extremely bullish. There's a either the morning star or the evening star, and then we got a bearish candle that formed, closed, and engulfed, and the market pushed down. So once we would have got here, this push up, and once we started seeing these wicks start poking out right here, start showing that the market losing momentum, market closed out. This candle right here in the middle is an indecisive candle. That's a doji. So when you see dojis, it's showing that the market don't know what it's going to do. So is a chance the market may shoot up, may go sideways from consolidation, or the market may shoot down back to previous area of support. After the doji, we did get the engulfing bearish candle, so the market pushed back down to previous areas of lower lows. So we got that full push down back to long push down back to new area of lower lows here. There's a pattern. I'm going to demonstrate what I see. It's a double bottom. Most of the time after the double bottom, we get a retest. The market shoots up, and here we go. First leg, second leg, third leg, fourth leg, retest. Market tried to break again the area of this resistance, was able to break, and the market dropped back down to new lower lows past our previous areas of support, and then the market end up creating enough momentum to come back up. And always remember that Forex 101, whenever the market is at lower lows, it's trying to return to higher highs. When the market's at higher highs, it's trying to return to lower lows. So right now we at lower lows, so the market's trying to get up out of here to create new higher highs. It broke an area of support, broke another one. There's a pattern here. So this area right here is important to me, or to us, and this area right here is important to us. I'm going to explain to you why. So once the market pushed up, I see this long wick. This long wick shows me that the market wasn't able to close out at the top here. So the market closed out here, so it lost momentum. And then it confirmed by we either got the engulfing pattern. I mean, it's the, I forgot this pattern name. Either the, I know it's a doji in the middle, but it's either the evening star or it's one of them stars. So once we see the stars, is a pattern showing that the market lost momentum. The next candle came, is a doji, so the market was indecisive. It wasn't able to close out, so market pushed down with its bearish candle, closed out below the previous 1, 2, 3 candles, showing it's going to be a momentum of a drop, and that's what happened. So it basically like a single top, came back down to retest previous areas of resistance, tried to break again, wasn't able to break, and we see these two wicks at the top here with these candles. Once again, the market's losing momentum. That's why we get these long wicks. The market dropped back down to return back to previous areas of support at the main level. So once again, once the market at lower lows again, it's trying to turn up. That's when we come back up. That's what we see. The market broke a few areas of resistance. It broke this resistance and it came back to retest it. The resistance, which turned into support, create enough momentum to push back up to the area of resistance, and then the market basically just consolidated sideways here, and it's either going to go break up or break down. And if we look at this area right here, this area is important. Once again, when we start seeing these wicks, it's showing that the market losing momentum, and the market may drop, and exactly what it did. But this time we didn't get the engulfing pattern here. So if this red candle would engulf this green one and closed out, it would definitely show that the market closed. So that didn't identify itself. The next candle was a doji, showing as indecisive. So there's a chance the market could just turn right back around and went up, but it didn't. So we had the next candle was closed out below the previous 1, 2, 3. So it's showing that the market may go up, and the market did that drop. So we don't know where we at with the market. I see a downtrend because we lost momentum, and then if you look at from here, it could be in an uptrend. So it shows you that the market may be in a range. By looking up here, we don't know if the market's going to turn around at the moment and go up, or the market's going to come back to previous areas of lower lows. So we have to figure that out. So we're going to erase our markups. We're going to create our trend lines. So as we don't know if we're in an uptrend or downtrend, we're going to do something a little different today. Let's grab that lower low area. We're going to pull this market price up. So price is, if the price is going up, it's going to try to return to this area here of higher highs. So we're going to slice that through price. And we do know that the market lost momentum, so we could be in a downtrend. Let's grab the top of that wick and let's slice it through price again in a downtrend motion. Okay, so from there we got our trend lines. We don't know if we're in an uptrend or downtrend. Look like we're in a range so far. So what we're gonna do is let's start marking up our SR lines, to figure out what's going on in the market. So we're going to grab our SR line. What we're going to do is we're going to head over to price. We're going to look at what level price is trying to break. We can clearly see it's trying to break this area here. If market is trying to go up, let's see how far it's going to go up. So the next area would be somewhere here. If we had to choose another level up, we can choose this level here. Okay. If we had to add more levels, we can do it on another time frame. For right now, let's keep what we have. Let's head down the time frame. We are going to add SR lines. So this definitely leg is coming up. So price leg is respecting our up line, our uptrend. So it's going up. So far, it looks like it. So we may have to add more SR lines on the way up. So let's go ahead back to the higher time frame, and let's find some more areas of SR lines. So next level will be here, which is this inverted peak, and we can also grab that peak right here. It's well respected here on this peak, well respected this inverted peak. I'm gonna look down the time frame, see if I see anything. There's a few hidden areas right here. So there's another peak, there's another inverted peak here, there's a peak here. Just got well respected on both ends. Also, like there's something here. Okay, we created enough SR lines on this time frame, so let's go back to the weekly to see if anything changes. Okay, that looks good. So what we're going to do is we're going to add SR lines on this time frame. So we're going to do a top-down analysis. We're looking for peaks and inverted peaks. That's an inverted peak right here. We have like something going on here. There's another peak here, right on this level. There's another inverted peak here. I'm gonna look down the time frame, see if I see anything else. So there's another, I see both ends. I see a peak and an inverted peak. So this will be an inverted peak side, and here's the peak side. So you get that kind of like right in the middle. So it's not gonna touch evenly. So no matter how we pull it, it's either the body's going to be on it, if not, some of the wick's going to be on it. And if I can find one more area, it looks like another area could be right here, which is this peak. So I'll pull it up. So I dropped it here, but it's not really getting respected here. This area look more important than this area. And only because it's leveled. So I will definitely drag this up a little bit. Definitely look much better. And if I have one more SR line, let's go in this area here. And it's well respected with the wicks on this side. So let's take a look at price and what's going on. So what I see is that market. So basically what the market did, it was at higher highs, it came down to lower lows, it did some type of formation here, and the market shot up, and I see a doji's forming, so it may be a retest here, and the market may shoot up further. So if we go down the time frame, this area probably be like a double bottom or triple bottom. So we got to take a look and see what's going on there. It could be way more than just a triple bottom. It could be like 8 bottoms or x 10 bottoms. So what we're gonna do is let's grab our rectangle. Let's go to price action, which is a doji right here, and we're gonna grab that highest wick, the second to last candle here, and we're gonna bring it down to the third last candle, which is this red doji look like. We're going to place it right here. So whatever the market is going to do, it's going to identify itself in this rectangle. Okay, I'm going to stretch out my SR lines. I'm going to explain to you guys what we trade. We trade the breakout and retest. So for example, if price is headed up, our trend line, if it runs into the SR line, we do not take entry. We wait for market to break our SR line. Once it breaks, we wait for the market to come back to our SR line, and this is the area we look for entry. Once we find entry for the buy to go up, we will take it to the area. We'll take this area for its TP. So once again, we will not take entry here. We wait for the market to break, come back to retest. And once the market retests, we take it to the next level, which will be our TP. And that will be an amazing trade if we see it. Okay, so let's head back over to price and let's take a look at what's going on. So we did create our rectangle here. So now we got to figure out what's going on. It was at double bottoms. It pushed up. So we're going to head down the time frame to see if we can figure out some type of pattern. Okay, so whatever's going to form, I'm going to have to tighten my rectangle up. So when we tighten our rectangle up, it will show us, so this is the area we're going to pay attention to. So this area right here is the area we're going to pay attention to, because this is the market. So whatever's going to happen, the market's going to do right here. So we can see that it is respecting our uptrend, but once it fully breaks this, we can know that it's probably definitely going up. If not, it can still turn around and go down, but for right now it does look like it's about to go back to it, go to previous areas at higher highs. But before it it may do a few things. So to identify what the pattern is in here, this rectangle, what you guys are going to do is you guys are going to go to Google. You're going to type in Forex pattern cheat sheets. That's Forex pattern cheat sheets. You're going to go to images and you will review all the images of the Forex patterns. You do not have to remember the name. The most important thing is remember what you see. The more you look at the images, the more you can have an idea what the market is going to go do after you see certain patterns. So with this pattern right here, we're not too sure what the market's going to do. So it's going to be a waiting game. But I'm going to give you guys some ideas the market can do. It can do a double bottom, for instance, first leg, second leg, third leg, push up for that fourth leg, retest happens somewhere and it goes up. Or the market can, because I still feel like we're in some type of range. So the market can come up, first leg, second leg, third leg. So if that third leg don't break this area here, there's a chance that the market come back down, retest previous areas of resistance that's in this area here, and then we get that drop down after the retest. That can happen as well. So we don't know. So as long as we wait into this rectangle, it's going to form and we can decide what it's going to do. Let's take a look at the lower time frame, see if we see anything else for entry. Okay, I see a pattern. I'm going to demonstrate what I see. We're going to tighten this up one more time. So if we grab, let's grab, so this area here is the area we're going to pay attention to. I see a pattern. I want to demonstrate. I'll see it in a few seconds. So what we looking for in this pattern, what we see is we did catch that double bottom. There we go. First leg, second leg, third leg, fourth leg. Now the retest should be happening somewhere in this area. And once we get that retest, it's going to head to this area of the next level of higher highs. Once it breaks this level, it head up to our next SR line, and so on. But if we read the candles individually, at least the last 1, 2, 3, 4, 5, the last 5 candles. So this is what I see. the market look like it is going to go up so far, because I see the wicks at the bottom here. But you start seeing these wicks. There's not much along one here, but this one shows me that the market came down all the way green as a green candle, wasn't able to close. Market came back up, closed right here. We got a doji. We got an engulfing pattern over the red. Once that closed out, it showed that the market pushed up. When this green candle closed out, it closed out above all these candles right here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and 11. It didn't close above the wicks of this candle and this candle, but it closed above the body, showing that the market may go up. And 12, this candle right here. So basically, when this candle closed out, it cleared all this. So it shows that the market has defeated this area, and the market may go up, and it did go up. Okay, so what I see with the last candle is a doji. It still has time to form. It has about 3 hours and 15 minutes for this candle to close out on this time frame. And then when it does, there's a chance that the market can lose momentum to come back down again for another retest, to shoot up, or the market can consolidate. But at the end of the day, it's a waiting game, and the market's already at the areas of high highs to try to take a trade. So we have to wait till the market to do what it do. So whatever's going to form in here is going to do it in this area, and we'll see the pattern. So we definitely waiting for the market to probably do some type of retest, and then we'll get an engulfing pattern, and we can take it up to the next level after it breaks out of our SR line. So once it breaks our SR line, it'll come back down to retest. We look for entry, and we take it to our next SR line. Okay, so just to put some math on the table, let's grab our long position. Let's say we do see that market breaks out of our higher highs, come back to retest our SR line. Let's say we take entry here, we can take it up to a next level, and that'll give us a total of 56 pips. If not, we can take it to the next level up, not too high. So I want to take it to the next level up, because we have to make sure that price clears this area here. So once price clears this area here, then I'll head up to the SR line, so on. So either we're going to pull this TP, take profit, target to the SR line, or we can take it above to somewhere in this area. So if you want to hit the highest wick, you can, but to me that would be too close. You can hit the body, or you can just play break even right in the middle of the SR line, the highest high of the next SR line. So we can play with somewhere right here. Okay, if you want to go high or lower, it's your choice. So that will give us a total of 93 pips at the top. So if you had to have a stop loss from price, it'll be somewhere in this area here. You can grab this area here for 35 pips. We can tighten it up a little more for about 20 pips. So I wouldn't put on 20 pips here. The only reason why, because I'm looking at these candles in these previous areas, and there's a chance that the market could come up, drop a long wick down. It could drop one of these wicks down and knock us about our trade. So let's pull it back just a little bit, at least to this level here. If not, you can pull it back to your SR line for 61 pips. But I feel comfortable with doing this. Okay, so this is an amazing trade, everyone. This is 93 pips for the take profit if we see this trade after the engulfing or any other pattern. If the market goes back on us and hit our stop loss, it'll be 36 pips. So that's an amazing trade, everyone. Okay, everyone, this is Cam Jones, FX Daily Analysis. Thank you for watching, and thank you for your attention.